You're listening to Ideal Practice, episode number 184. Today, guys, with my guest, Randall Avery, we're going to teach you how to create, read, understand, and use one of the most useful financial documents you could have as a practice owner. Yeah, we're going to dive into the ever so sexy profit and loss statement. Come on, tell me you're excited. I know you are. Okay, so maybe you're not, but you will be after you listen to this. So, stay tuned. Hi, I'm Wendy Pitts-Reeves, and with over 2 decades of experience in the private practice world, I've built my 6-figure business while learning a lot of lessons the hard way. This is the first podcast that shows you how to apply the principles of energy, alignment, and strategy to build a practice that is profit-centered, but people-forward. This is the Ideal Practice Podcast. Hey guys, and welcome back to another episode of the Ideal Practice Podcast. This is Wendy Pitts-Reeves, your host, and I am, as always, genuinely excited to be hanging out with you today. We're tackling a tough one today, y'all. We're going to talk about a subject that does not come easily to me, but one that I have learned is important to understand. Today, you get to meet my guest, Randall Avery. Randall is a certified financial planner and a certified financial analyst. I didn't even know that was a thing. He is the principal and owner of Diesel Wealth Management. It's an advisory firm based out of Atlanta, Georgia. He's got over 15 years of experience in finance and accounting and investment analysis. Oh my gosh. And he specializes today in helping individuals like you and me and families achieve financial independence through strategic planning and personalized asset management. In other words, what to do with your stuff, your financial stuff. Before founding his own business, Randall held senior financial roles where he led budgeting and forecasting and analysis for multi-million-dollar initiatives, several companies around the Atlanta area in particular. But as he will explain to you in this interview, he really wanted to do something that had a little bit more heart to it. Okay, so today he is committed to helping individuals and, believe it or not, practice owners. This has become a real area of focus for him. He wants to help people like you and me build clarity and confidence and long-term financial stability in our lives and in our work, even when you don't think you have a whole lot to work with, he can help you. So, I asked him a little bit about like, why in the world is he choosing this as his area of focus? Because I think that's really interesting. And I think you will appreciate hearing what he has to say. And guys, I will tell you towards the end of this interview, I shared some personal experiences I have had around this issue that I don't always talk about, but I'm hoping it will help you feel more comfortable tackling some of these things yourself. As basic as it is, for those of you who are used to this, understanding a P&L, a profit and loss statement, is not something that came natural to me. I didn't know what that was and didn't really care for a very long time. But the cool thing today is we are going to walk through that step by step, not only so you understand what it is, how to create your own, and how to use it to guide and inform your decisions as a practice owner. This is very good stuff and it's important. So I hope you appreciate this. I hope you learn something and I hope you enjoy it. And without further ado, let's get into the interview. All right, everyone. Welcome back to another episode of Ideal Practice. You've already heard a little bit about our guest today. And let me tell you, we have a really fun, sexy, oh so helpful conversation that we're going to be holding for you today. I think you're going to love this because we have not done this here before today on Ideal Practice. So Randall, come on board and say hello to everybody.
Hi, I'm excited to be here. I know the topic may not sound as sexy as you think it is, but we're going to make it fun and hyper relevant. So I'm ready to get it.
Fun and hyper relevant. Yes. So guys, we had talked about diving into a little bit of some of the basics around budgets for a small practice, for a small business. But Randall suggested today that what we really want to do is dive into the nuts and bolts of a profit and loss statement, a P&L statement. If you are working with a bookkeeper, and I hope you are, this is something you may be familiar with, but I don't know about you, but I didn't hire a bookkeeper till I've been in practice for 20 plus years. So I know for a lot of you, this will not be something you're used to. And I applaud Randall already for getting us on the right track. So Randall, before we get into the juicy part, let's just let people get to know you a little bit. I love for people to know where you are. Tell everybody where you are in the world and a little bit about who you serve and how you serve them.
Yeah. So I'm hailing from the Metro Atlanta area in the Southeast here. My background is somewhat unique, but it's more applicable as I explain it. So I have a background in corporate FP&A, so that stands for financial planning and analysis. I did that for about 7 years for a couple of large companies in the Atlanta metro area. But doing that work, and I enjoyed that work because I got to analyze business, profit and loss statements, which we're going to touch on today, but it really didn't have a soul. So I wanted to help individuals, but I still had that knack for businesses. So I specifically help practice owners. So when we think about practice owners, that's mental health, that's dental practice, those are attorneys. And I help them manage the balance of making sure that their practice is successful financially, but also them themselves financially are successful, because we as business owners do a lot of work. And we need to see some fruit from that labor and some type of economic return for us to keep us in the game, really.
There's a thought. Economic return. What a concept. Yeah. I'm always telling people we are not in this. This isn't volunteer work. The whole point here is to make some money and do some good and ideally have some fun along the way, I think. So yeah, I was kind of curious about that. So your focus really is on practice owners. So professionals who have, and you mentioned attorneys and accountants, they also have a private practice, right? So, how did you land here? Because from corporate to this, I am kind of curious about that. Because it's a very unique niche and a needed one. I'm curious about that.
So when I stepped up, I wanted to serve individuals. So I thought about, people I knew, people in my community, family and friends. But then I obtained a client and she was a licensed professional counselor. And being from the South, counseling and mental health is not that exposed. It's doing a lot better now, but back then it wasn't. I learned about her profession, what she does, her ability to make income, the flexibility she has. I was like, this is something I truly enjoy. Why not help people who help people? So whether that's an attorney or dentist, they're actually helping people, and they also have to be people. So it makes for a really good relationship. And I love people who want to specialize in what they do. And business owners, especially small practices, want to specialize what they do, and they allow me to do what I do, which is help them grow their money. So it's a win-win all the way around.
Got it. That's super cool. So you're a money guy who was looking for the soul in money work. That's what you were doing. Yeah. Nice. I love that. That's really great. Did that LPC that you worked with, did she kind of open your eyes in a way? Was that a new world to you, hearing about her practice? And yeah.
It was a completely new world because she was dual. So she worked for a local hospital system, but she also supported a private practice. And one thing I love about business owner is there is no cap on income. It's all about your ability to innovatively attract clients and grow your business. So I love that balance. And it was kind of like a nice middle ground for me to fully go into business owners.
Mm-hmm. Mm-hmm. That's true. There's no cap for you either.
Nope.
That's right. Like that. Yeah, that's true. We don't always see it that way. If you are stuck in a dollars for hours kind of practice, you may think there's a cap, but there isn't. It's true. It's just a matter of how creative you are, and intentional about how you want your business to grow. So, and learning to manage your money is really important. I had someone recently, this is funny, but online, somebody recommended Ideal Practice to somebody else someone was saying, I need a podcast to listen to about money. Can anyone recommend somebody? And a colleague of mine recommended this program. And I got tickled because I thought, this isn't about money. We talk about all kinds of things related to practice, but we do actually talk about money quite a bit because that's the piece most of us struggle with so much. There's lots of shame, lots of heartache, and a lot of people working really hard and not bringing home very much. And I really do want to change that. I want people to feel good about what they do, proud of who they are. I want them to do good in the world and to reap the benefits, financial and emotional and societal, that come with that. So, all right. So help us out here. Why did you think this was a good idea? Why do we need to talk about a P&L? Who cares about that?
So I really believe the metrics of a business really tell you a lot about how you're practicing. In our minds, we may think, hey, we're being extremely effective. We're doing all the right things. But what is the check besides our internal gut feeling that we are actually doing the right things? What is that, second set of eyes? And I really believe your P&L statement is that second set of eyes on your business. Say, am I doing the right thing? Am I making the impact where I want it to be? And we're going to couple that with some metrics as well. So I think it's going to really help you be a better practitioner. And a lot of people don't think, how can my money tell me that? I think by the end of this podcast, we'll be able to show that.
Yeah, that's good. Am I having the impact I think I'm having? Yeah. Okay. So walk us. So first of all, how about just introducing the concept? What is a P&L statement? Where do you get one?
Yeah, so your profit and loss statement is just a manifestation of the activities of your business counted in dollars and cents. A profit loss statement usually starts with revenue and ends with profit, and we all want as much profit as possible. Usually your bookkeeper will put this together. But even if you don't have a bookkeeper, you need to have a sense of these numbers. And I actually do recommend you track these on a monthly basis. Why monthly? That's usually when your bills are due. That's when your subscriptions are due. That's when you actually withdraw money from your business, is usually on a monthly cadence. That way, you know that you're moving in the right direction, because the number one thing and why business fails is not because they're not good services. It's not because their product isn't good. It's because they run out of cash flow. Yeah. So if your idea is to stay in business as long as possible, keep an eye on your cash flow, your dollars and cents. That's where the P&L actually comes in.
Okay. So let's say you don't have a bookkeeper. Mm-hmm. You're a solo provider. You rent office space from somebody in your town, and you're seeing 20 to 25 people a week, which is fairly common for a full practice. You've been in business for maybe 3 or 4 years. You've kind of got the hang of it. You've got a steady flow of clients. You've got a website. You've got some presence in your community, but you are just kind of winging it. And you're ready to stop winging it. You're ready to kind of clean it up. And this is the next level, sort of an evolution as a practice owner, to take your money more seriously and to, I'm going to say, grow your skills as a as the CFO of your practice, right? All right. So if I don't have a bookkeeper, first of all, how do I create this? Is that the best place to start? I mean, you tell me if there's somewhere else to start. Okay.
It is the best place to start. So where do I start? Usually most businesses, and even some well-established business, they start in Excel. Google Sheets nowadays definitely works for you. Okay. And usually you can find this information pulling from your various financial systems. So whether that's the payments that you receive from your insurance providers, whether that's just a payment processing system that you use for your private pay clients, or from your credit cards, so you get expense information. So this information is readily available. And a lot of times it's easy to pull from these systems. And all you do is pull the numbers and you plop these numbers into your spreadsheet. So usually business owners will start on a spreadsheet tracking their expenses.
Okay, I love that. That's actually quite practical. Okay. And it's reminding me, my very first business partner way back in the day, she had an Excel spreadsheet that she managed religiously, and she would hand that over to her accountant when it came tax time. And he would often brag about that she was the most prepared client he had and wished everybody else would do what she did. And I remember looking at that and thinking, how do you do that? Because I did not have anything close to that, not even close. I won't tell you how I did my taxes back then. So as simple as set up a Google Sheet or an Excel spreadsheet, whichever one you want to use. You said pull from these common places where you can already get information. Bank statements, credit card statements. Did you say something else?
Yeah, any system in which you receive payments. So your payment processor, whether that's for private pay, and also your insurance reimbursements, those usually have a system where you can actually pull those numbers.
That's right. Insurance reimbursement. So Stripe or Square, if you use one of those to get paid, there'll be reports in there. If you use something like Simple Practice or any other kind of electronic health records platform, they probably have something like this. So pull those reports from these places where money is flowing through your business already, and then dump the numbers into the spreadsheet. Yeah?
That's correct. And one thing I would say is be patient with yourself with this process.
Okay.
It's not once your partner that you work with, she probably did that in a snap. It was nothing to her. But when your first time out, give yourself a couple hours, make multiple day appointments with yourself, and slowly find this information and put it together. And I really think if you give yourself some grace, it will be more of a manageable process.
That's very good advice. I like that. Also, what you just said, set aside several appointment hours to do this, right? Don't do it all at one time because you're not going to be happy. Yeah, you're shaking your head. No, don't do that. Yeah. Okay, let's keep going. So what do we do?
So first thing, that's how you receive the information. Now we're going to talk to the elements of the P&L. The number one factor in any business is revenue. They say if you aren't making sales, you actually do not have a business. I could argue that you may not have a business if you're not growing sales as well. It's a different type of entity. So being able to track your revenue is important. For practice owners, revenue comes in many different forms. We discussed a couple of these things. The first one is going to be insurance reimbursement. Right. I think we all get our heads around there. Private pay session. It's a big deal nowadays. And usually the highest profit margin for a lot of practices is going to be their private pay clients. Group therapy. A lot of practices do a lot of group therapy. Intensives and workshops, supervision hours. And I know a lot of therapists stepping out into speaking gigs and corporate training. So those are your revenue sources. And I recommend you don't have to do this starting out, categorizing each type of revenue source. That way you get a feel. You may say, hey, I'm really killing it in trainings, but does your P&L reflect that?
Yes.
Are you really making more money on private pay? You might say, well, I need these insurance reimbursements because that's a large percentage of my clients. But if private pay is where most of your revenue is coming from, maybe you shouldn't focus as much advertisement, as much effort in those spaces. So your revenue is a key element that actually tells you where your energy is going and the return on that energy.
Love that. Can I add to that when you're talking about tracking, basically track all the different ways that you make money. You make money lots of different ways, right? And you're saying break it down because you may think you're making most of your money from one particular thing, but you may not be. I would also add into that because I've learned to do this as a coach, to ask people about this, how much money you're bringing in from each insurance contract you have. So if you're on panel with seven different companies, and you tell me if you agree with this, Randall, but I have found it helpful for people to, I ask people, how much are you making from Blue Cross? How much are you making from UHC? How much are you making from Aetna? And I have had people who almost had a panic, I don't know, and I don't really want to know, and I don't know how to find out. Well, we can't make an informed decision about anything until you know that. So your revenue, the more detail you put in there, the better understanding you're going to have of where your money's coming from and where it's not. Yeah.
And you probably see this as well. As firms or practices become more mature, they tend to drop certain insurance panels because of what you articulated.
Yes.
To be honest, the juice is not worth the squeeze at times.
100%.
And remember, we want to earn money so we can reinvest back into the business, which we're going to touch on. Okay. Now, one thing I do want to touch on is having the numbers nice, but I like to make the number real, make it lively. So how can you make revenue in particular more live? So what about average fee per session?
Okay.
Goes back to which area am I doing? So maybe I receive a great fee for a private practice, but if I do a training or a workshop, maybe I get a nice fee per session, right? Okay. Fee per hour. Maybe I get a large fee for a training session, but if it takes 50 hours to come up with the training, execute the training, maybe that's not a good use of my time. So this is where we take actual numbers from the P&L and bring them into real life to really see, am I winning the way I believe I'm winning? And that should help you direct your business.
That's interesting. So would that be something you would dump into this spreadsheet? It would be, I brought in X amount of money from private pay clients in the last month, and that averages out to X amount per session. I gave 3 talks last month. I got paid for one of them. That averages out X, whatever number. Yeah. Okay. That's a good idea. Okay.
The more metrics
you said per session and per session and per hour, 2 different things. That's good. Okay.
And the more metrics you can add in, the better. Remember, start off slow. And this spreadsheet, like your partner spreadsheet, it'll blow up naturally because I like to call it gamification. You game your business and you really say, okay, how can I manipulate this number? How can I do this? Because once you start getting into it, it becomes a little bit of an addiction. I think a positive addiction for business owners.
Okay, that's new to me.
Yeah. Now, the last thing I want to talk about revenue is no-show rates. So there are things that happen with revenue. Number one thing is no-show rates. And for those therapists who focus on adults, this is a big deal, especially nowadays. Adults are becoming a little bit more finicky because pocketbooks are getting strained. If anybody's watching news, there has been significant mass layoffs, usually around the populations that do private pay. So no-shows are a thing. So you need to track those things for two reasons. One, for booking. So if I need 20 sessions for me to, we call it, crack your nut every month, maybe I need to schedule 25 sessions to make sure, because I know I have a certain percentage of no-show rate for the populations that I serve. So really understand what makes or drives those revenue numbers.
You're saying schedule a little bit more than you think you may need to balance out the loss you may experience with no-shows, right?
Yeah.
I encourage people to charge their full fee for a no-show. If you do that, you won't have them very often. You'll have people cancel in advance, right? Now, you may have people who cancel appropriately, 2-3 days in advance. So that's a point. That's a point. But if you charge full fee because your time is worth what your time is worth, you're not going to have many no-shows. Trust me.
That's true. There's something amazing about people having skin in the game.
Yes.
That they show up. But even then, like you said, there will be no shows. So why not add a little bit more revenue if you have the capacity for 20 patients? 1 or 2 are not going to show.
Yeah.
Pad your stats.
Yeah.
Play to win, for lack of a better word.
Yeah. You're going to have a certain amount of cancellations. Mm-hmm. That is also very common in the summer, June and July. It's very common in December. There are sort of natural ebbs and flows to people's schedules where things pick up and slow down. So that's a good point. Maybe book a little bit more because some people are going to change their mind. That's true. Okay.
And I want everybody to make this personal. So your business. It may be Mondays people cancel. It may be Tuesdays, Fridays people cancel. Really just analyze the number and remember what I said at the beginning. This knowledge and this is going to happen over time. So you're not going to get this every day. But just know there are some things that take your, analytics of your P&L to the next level.
Okay. I like the gamification idea. Okay.
All right. So now that we have revenue down, and revenue we can spend a whole day on, which maybe you have me back one day to have it. But the next thing is going to be cost of service, cost of goods sold for traditional business folks. So how much does it cost of care? So cost in care includes clinician compensation, payroll taxes, service-based admin support, billing services, all those things that it costs to get that care completed, okay? These are usually fixed, meaning that there's not that much wiggle room. You may be able to find a service provider that is less than another's, but these things are usually fixed. And you have to, and like I say, these sometimes have high switching costs. What does that mean? That means it costs to switch a customer service system. It costs to switch your billing purses. It costs to switch your administrative help, right? So there's cost of these things. So these things are fixed. What does that mean is we have to be strategic with this line item. Strategically decide who does your billing, strategically decide who's your admin support and all those other things. So this is an important element. I would love to hear your perspective of working with folks on this specific line item, those fixed costs. Yeah,
I want to hear about how you strategically think about this. In my mind, those are not fixed costs. Mm-hmm. So, and I appreciate this is fun. I appreciate this. A fixed cost to me is my malpractice insurance, my professional membership dues, my office rent. Those are fixed costs. But what I pay my virtual assistant or my copywriter or my web designer or my bookkeeper, some of those fees, maybe if there's like a flat monthly rate of some sort for somebody or whatever. But a lot of that does ebb and flow. And in terms of payroll, I don't know how you think about that. Like if you've got 1099s who work for you, or for that matter, W-2s, and their income may ebb and flow based on their caseload. I would not think of those as fixed costs, but maybe I'm wrong about that.
And I believe I misspoke. I meant it's hard to change costs, switching costs, high switching,
Yeah.
because these are costs of care. So care has to be had usually before these costs are realized. So you're 100%. Sure. It'll be variable to your revenue. I appreciate that correction.
Yeah. That's true. Right. And okay. And once you have these in place, you're not going to change them very casually. That's true. Yeah. Talk to me. I've been I've been using Kajabi for several years now. Would not want to change that very easily. Yeah. Okay. Yeah, that's true. So strategically, talk to me about strategically choosing those items or using those items. I think I know where you're going, but explain that.
Usually, my experience, the best way to manage these, be strategic these items, is usually ask around and see what people are using and why.
Okay.
Because a lot of this is inside knowledge. Which payment processor gives us the best rate of return, right? Which administrative services actually provide us this? Which billing people gives us the best return and does it cause us a headache? They're not fixed, high switching cost things. Mm-hmm. These are things that only come through word of mouth and word on the street. Okay, so that would be my recommendation. You can do all the analysis in Google search, but in actuality, when a patient comes in or a client comes in and you need to serve them, that's when the rubber meets the road with these services.
So you're saying be careful and thoughtful about who you hire and what you pay for, right? So the easy one that you just named was processing payment. So Square, PayPal, Venmo, Stripe, whatever service you use, that's easier. That's sort of an easier analysis of which one's going to do me the best good, whatever. Which billing company? So I have talked about that here in the past. Hiring, if you're going to use a billing company, if you're self-pay, you may not need to do that. But if you do want that, putting some thought into who you hire and how and where, that's important. Yeah. Because once you set up with somebody, it's hard to change. Yeah, so these are things to be careful about. I think subscriptions might be in there as well.
Yeah, certain subscriptions that fluctuate with care.
Yeah.
So this is specifically related to the care that you go in. So there are some subscriptions that are not related, like a Canva subscription. That wouldn't count in this right here. So this is specifically related to your patient care. Okay.
So specific services you're paying for. Mm-hmm. Or tools you're using that directly relate to your clinical work. Okay. Yes. So you put this in the spreadsheet as well. This is like the next section.
This is the line items. And the question is, where do we get this data from? Usually this is going to come from your credit card and or a statement that one of these service providers provides you.
Okay.
That's where you get this information. Once you receive that information, you just jot it down into your spreadsheet.
Got it.
Okay.
Okay, good.
Next one. Okay, so this is, so in the P&L, there's like subcategories. And one of the subcategories is called gross profit. So gross profit is your revenue minus your cost of care or cost of goods sold. Okay. And that is really where you try to figure out, okay, where is my wiggle room? And you track this on a month in and month out basis to make sure that it's consistent. Because if there shouldn't be too much fluctuation as far as your cost of your gross profit, because that is purely determined by your revenue. The only fluctuation there should be if my revenue goes up, my gross profit should go up. It should be proportional, if that makes sense. Things should go up. My revenue goes up 10%, my gross profit should go up around 10% as well. If you see a fluctuation in that, that's when you want to roll up your sleeves and dig down, like, why am I being charged more to provide a service to my patients?
All right. This is where we have to slow down because my brain starts to get foggy. Okay. It's okay. This is why I have these conversations. And we're not looking at a document. So when you're just hearing it, you have to sort of picture this in your mind, right? So and guys, I have asked Randall to put together for us a sort of a sample P&L that we can share with you so you can see what this looks like, which I hope will help you. We'll work on that after this is over. And we will have that linked in the show notes below. I'll make sure we have that. But I want to reframe what you just, or make sure I understood you just right. So you're putting this list together. You've got your total revenue that's come in. I'm going to do it for the month because you said do this once a month. That's an easy thing. So in the past month, how much money did I make from, private pay, insurance, talking, workshops, whatever? Got a total number. That's a gross revenue. And then how much money did I spend to provide that care? And you were very specific about how you explained that. We're not talking about marketing cost or those kind of, we're like very specific to that care. We total that up. We subtract that number from the first number, and that is our gross profit. That is
Yes,
not
gross profit.
Okay. Okay. All right. Just want to make sure you will lose me very quickly. This is not my forte. There's a reason why I ask for help all the time. Okay, I'm with you. Good. Next.
Very good. So that gross profit. So, and that tells you how much it costs to actually deliver that care. Now, the next line item.
That's important. That's important.
Yes.
I'm sorry to interrupt you so much, but I want to make sure people hear this. That tells you how much it's costing you to deliver the care, and you need to know that.
Yes.
Okay.
So important. And like I said, once you monitor your numbers, you'll begin to make the adjustments that's needed for you. And just to give you kind of an angle, most people target between probably around 40 to 60% gross margin. So what is the gross margin? That is going to be your gross profit divided by your revenue. Your gross profit divided by your revenue is called your gross margin. And people try to usually target around 40 and 60% for that.
I did not know that, honey. Okay.
All right. So
gross profit divided by gross revenue equals gross margin. Your target goal is 40 to 60%.
Yes.
Got it.
Okay. Now, this is the fun area. The next area is your operating expenses. This is what I like to call, this is what makes your business unique. These are a lot of the micro decisions. Your payment processor, there's only so many out there. Your insurance payment providers, like though there's only a limited number that you could choose from. Yeah, it's growing, but most people are going to choose the same thing. But these items, your operating expenses, are what make you unique. Your rent and office space, where you're located, makes you unique, right? Your customer service software sometimes makes you unique. Scheduling systems, marketing, continuing education, with your licenses, insurance. These elements are what make your business maybe stand out from the other folks. And this is also where your virtual assistant comes in, that is not dealing with client care. Okay.
Okay.
And this is why business owners become business owners, to control these elements. Because if you don't worry about these things, if you want to have a completely different, you just go work for a large agency or another private practice. Yeah. But if you want to go in the business for yourself, this is why you come into these metrics, how you market, the people you decide to reach out to. This is why you go into business for yourself. What are your thoughts on the operating expenses of a business?
Mm-hmm. Y'all, I feel like I'm in class and I'm going to have a pop quiz. I think the thing that's a little bit that I find myself questioning here, like, I mean, totally, yes, I track all this stuff too. And this is where I've had to learn to be careful. One of the biggest mistakes I have made as a practice owner is that once I understood that everything that counts as operations, all the things that you do to run your business or to grow your practice, counts as a business expense, and that's all something you can count off on your taxes, I could justify almost any expense. You're laughing because you have seen this before, I'm sure. Mm-hmm. And I have had to learn to rein that in, that just because I can count it off as a business expense does not mean I should go spend that money. But I'm a little fuzzy about is this, and what's new to me that you're saying today is the delineation between expenses that really are directly related to client care versus expenses that are part of the sort of the universe of your practice, I guess. That's new to me. I think I would have thought of all of it as going to care, but yeah. I guess not, maybe.
And you usually break it up because all these things are strategic groupings.
Yeah.
Right? Okay, yeah. So you decide where your office is located given the population you're trying to serve. You decide how you want to market, the robustness, how much you spend on social media, those things, because that's how your business thinks. So you need some way to break these things apart. And these are the standard breakup. Your business owner, you can do what you want. But these specific allocations allow you to break up cost of care. This is what it costs me to deliver my care. And these are my preferences on how I want to run my business.
Yeah.
And like you said, you can justify any preferences, but you have to keep somewhat of a check on your preferences to make a business. Your cost of care is what it is, but your preferences, those are where you have to have that gut check.
You know what's coming to me is that there are certain things you have to do for your clients. You have to have malpractice insurance. You cannot function without it. You have to have some way of seeing them and working with them. So if you're a telehealth provider, you have to have Zoom or something that you're using, right? You have to have that. If you have an office, whatever, you have a choice. Your point about what you rent and where you rent it. I just last year moved from a smaller space to a larger space that I didn't even really need, but it was nicer and felt better, and I just thought my clients would like it better. I don't have to have a podcast, right? I don't have to have handouts or marketing materials that I can pass out at the chamber mixers. So what I hear you saying is think about your expenses, the money that you are spending to run a practice, group it in ways that will help you understand where your money's going, where it's coming from and where it's going. This is the story we want to be able to read. This is where we, right? Am I getting this right? Yeah.
Spot on. Okay. And I think what we're really saying is put definitions to your dollar activity of your business. Define this group of revenue. Define this group of expenses. And once you put some harder definitions around it, now you can get your head around it. But if you lump everything together as anything that I swipe my credit card as a business expense, that's when you're not really playing the business game. What you're doing is you are operating, you may be profitable and you may be cash flow happy, but you're not fine tuning your business as you could, which is all we're saying here.
You're also not being intentional and informed.
Correct.
Right? You just sort of, and then depending upon how you're wired, like for folks who are really high fact finders, who love a good spreadsheet, who get into that, I think you're weird, but I know you exist. But if that's your thing, you're going to want to know how much, I don't know, what your cell phone bill is, whatever, and that's going to be interesting to you. But if you're more like me, and your tendency is like, I don't want to look at it, I don't want to think about it, it's very easy to gloss this stuff over. I have found that, and I have had to make myself start digging into it more. So I appreciate this, Randall. You're saying as part of your job as the CEO of your practice is to learn how to read what these numbers tell you. And this is the beginning. This is baby steps into that practice, right? Okay, so track your expenses, group them in a way that makes sense to you so you get the information you need out of it. Okay. All right.
And it's your business. You can define it. Yeah. I've seen definitions of revenue that will make you chuckle. But try to make it fun. Name it what you want to and categorize the way you want to. All you need to do is just be consistent. And once you're consistent, then you can begin to leverage things.
Okay. I like the idea of naming things and having fun with it. Okay.
All right. So the next there, I mean, your accountant may laugh, but I think you can persuade them to call it what you want.
Sure.
So after you have your operating expenses, so let's go through the line again. So we have revenue minus cost of care expenses. That is our gross profit. And after we take out our gross profit minus that minus the operating expenses, now we have what is called EBITDA. Okay, EBITDA is a strange name. Okay, but let's just call this what the business produces before taxes and owner's draw. What the business produces before taxes and before owner's draw. Those who don't know what owner's draw is just what you transfer to your checking account.
That's your salary.
That's your salary.
Yeah.
Well, it depends on how you lay it out. So if you are a Schedule S corporation, then you would take a salary above, and that may actually fall under cost of care. So it can be gray area. And like I said, we can define it how we want to, but
Okay.
that's the owner's draw. So that's at the end of the year or end of the quarter. That's what you draw into your checking account. Now, if you're a Schedule C employee and do not pay yourself a salary, then yes, your owner draw would almost constitute a salary. I know we're getting real namey here, but
Got it. Got it. There's a difference
that's
between
how
your okay. What was the word you were using for this section of the P&L?
called EBITDA. So it's the earnings before interest, taxes, depreciation, and amortization. So a lot of us as service providers don't worry about depreciation and amortization. So that we forget that, but that is the accounting term for that. EBITDA, earnings before interest, taxes, depreciation, and amortization.
EBITDA.
There you go,
I
EBITDA.
thought you were speaking Latin for a minute there. Okay, that's completely new for me. I've never heard that term before at all. Okay. What your business produces before taxes and before owner's draw, before you pull money out of it. So it's kind of like the bottom line when it's all said and done that you've got to work with.
That is it. And the reason we call this number out before the owner's draw is because, let's be honest, as business owners, we may throw a utility bill in there. We may throw the square footage of our home to reduce our tax bill. So this is the number we as business owners like to reduce our taxes from, right?
Yeah. Yeah.
For lack of a better word.
100%. Yeah.
That's where we go. So this number right here, this is what we're going to determine, okay, how much we can draw on a monthly basis. I recommend that you set yourself on a fixed income. Me personally, yes, you had an amazing month. That doesn't matter. Keep yourself on a fixed payment. When I say fixed payment, fixed transfer from your business checking account into your personal checking account, and learn how to live within those means. Your business bank account is not a piggy bank in which you should be pulling from every time you want to go on vacations. Try to live on a fixed amount, because that way you can actually understand what you can reinvest back into your business, which is going to be another line I'm going to discuss. But let's stop there and tell me about your experience, because you're a business owners on owner's draw, moving money from your business checking to your personal checking.
Yeah. Well, you know that because I've read about this on your website, so I know that you're sensitive to this. Like the biggest challenge for a lot of our folks is the irregular income, right? You may have a really great week, really terrible week, a really great month, a really terrible week or month, depending upon where you are in the year. It's very common that people do not pay themselves a regular amount. I want to make sure I'm tracking this number though. So because we're working our way through the lines of a P&L, right? Yeah. So we've talked about gross revenue, the margin thing. We've talked about revenue minus expenses of all the different types, that bottom line number. And then you've thrown in this last, where does this number come from? Is this after you've subtracted the operating expenses from the rest of it? This is whatever's left. That's what you've got to work with. Okay.
Correct.
Okay. So on a monthly basis, I've got this chart, and y'all, if you use a bookkeeper, he's right. They'll put this together for you, which is extremely helpful. That's actually what I do. And I have a call once a month with my bookkeeper, and we sit down and we go over it. And I have learned, honestly, I hate to admit it, but I've learned fairly recently, like just within the last couple of years, to go over that in detail and to not just kind of go, oh, okay, I spent that much on marketing this month. Okay, whatever. But to start tracking it over time, looking at it as a portion of the whole, what that tells me about the overall health of my business. But what you're saying here, so you have your gross revenue minus your cost of care. I like that term. Minus your operations, the cost of your business, all the other stuff, the number, and whatever you land on, that's what you pay taxes out of. That's what you pay yourself out of. And here you're saying, give yourself a regular amount. I have found that very hard to do at different times of it. Sometimes you don't have enough to pay yourself whatever that regular amount is. It can be really widely different from one time to the next. So do you have, how do you come up with what that number is? Are there different ways of thinking about this? Because this is, I think, extremely challenging.
It's hard, especially if you're starting out or a couple years into the business, and life happens, right? Let's just be honest. Things happen in your life. What I usually do is sometimes people play games, and I play games with my business. I want to keep a certain amount in my business account at all times, whatever that number is. And this is really important if you have payroll, 1099 people you have to pay. If you want somebody to look for a job who's working for you, say, hey, I can't pay you until next week. Okay. So there needs to be some amount of reserves set aside for if you have employees. So whatever bank number you can think of to cover that, that is the amount. Then after that, that says, okay, any money above that, I can transfer to my personal account. And usually over time, you can kind of estimate. I start off low at first and then kind of creep it up over time because you know the fluctuations of your business. Mm-hmm. And I think that's usually the best way. And the reason we're going over this P&L, because once we describe it, now we can kind of do things like budget for it. We know the drivers that move it. But if we didn't go through this line by line, you'd be kind of estimating, throwing up in the air, not knowing your strategy to produce that income that you transfer into your personal account.
Yeah, you're just guessing. Yes. Yeah. One of the things I used to do was like whatever money came in, that's what money I had to live off of, right? So I would just pay whatever bills I need to pay in my business, and whatever was left, I would transfer as an owner's draw and live off of that. That's very sloppy and very unintentional and terrible way to do things. Do not do it that way. I will tell you, I have had more luck myself, or maybe not luck's not the right word. I have found it to be more helpful. I have had trouble coming with a flat rate because it's been all over the map, depending upon where I was, what phase of business I was in. I've had more success with transferring a percentage. And what I ended up doing, kind of what finally began working for me, was whatever gross revenue came in, I have a percentage that has to go towards operations, which is to cover all those things you just named. I have a percentage that has to go for saving for taxes. I have a percentage that I set aside for owner's draw, but I don't pull all of that out. I pull a percentage of that so that there's a cushion that's growing all the time inside the business, which I don't have I have 1099s. I don't have W-2s. But if I had, like, if you've got W-2s and you've got to meet payroll, by golly, you better make sure you're setting aside the money for that. Yes, 100%, right. But the flat amount has never worked for me. Percentages have worked for me. Is that terrible?
No. And percentages work because it's proportional to success. Now, there's a caveat there. Okay. What if your business has an extreme downturn?
Yeah. Then there's not much. The percentage is very small.
So what really is what you're saying is you've had the ability to regulate your personal life expenses. Mm-hmm. When I talk to business owners, I say, hey, you're actually managing two sets of books, your business books and your personal books.
Yes.
If you do the percentage, which I believe definitely works, you have to make sure there's that wiggle room as far as in your own personal savings reserve to handle those things.
Yeah, that's true. That's true. I think the big thing for me is learning to build up a reserve in the business. Mm-hmm. Like, I did not know that concept for a long time. I do now. No matter what's coming up, you need to have a reserve there. So there are a lot of reasons why you have to learn to live on less for a long time. People don't understand. I think a common misconception, I certainly see this with clients, that, if you're charging $150 an hour and you're seeing 20 people a week, that sounds like you're making a lot of money. But by the time you pull all of this out of there, you're not actually, right? So being careful and deliberate about what you pull out to live off of, make sure that you've got money left in the business. I think that's been the big aha for me in the last 5 or 10 years that I didn't know for a long time. I'm better at making it work on the personal side. Like, this is what I got. This is what I got. I will make that work. For a long time, I was terrible about that on the business side. It's either a business expense or I pulled it out. I don't do it that way anymore, but that was a big mistake I made for a long time.
I think you knowing all these things now, and if you were still practicing, when you go into a client meeting, you know the profit opportunity of every single session. So you don't think of it, this is a $150 thing. You may think, well, this is maybe a $75 into my personal account activity that goes along in those things. I think that's important. And one thing you also said is, you know, I recommend a fixed rate because there's a lot of fixed expenses on the personal side. So, you know,
Yeah.
there's a contribution you have to make maybe to help your partnership operate.
Yeah.
There's a contribution you have to make to pay for daycare. So, and you need to make decisions on your personal life based off a predetermined fixed amount.
True.
And I actually believe subconsciously you kind of knew in a given year how much you were going to transfer overall. So you operate on that yearly thing, which is actually extremely hard for a lot of people.
Yeah. Well, I learned even early on at the very beginning that, you know, if you made $100, you might bring home $60 of that, maybe 70 if you were lucky, but that your overhead was, in my experience, was always going to be around 30 to 40% of whatever your gross was. It's kind of the ballpark. But that's just ballpark. And what you're teaching is that's not good enough. Like you really, really want to, and you are 100% right. I'm just being transparent here because I don't ever want to pretend like I've got all this figured out, because I don't. I tell everybody all the time. The reason I talk about this so much is because this has been the thing I have had the most trouble with as a practice owner myself. I'm a very good therapist. I'm a very good coach. I have not always been a very good practice money manager. Way better than I used to be. 1,000 times better than I used to be. But it's an ongoing process. I'm always learning. And that flat fee, like you're right. You know, if you worked for an agency and your salary went up and down every week and you never knew what you were going to get, it'd be hard to budget based on that. It'd be hard to pay daycare based on that. So 100%, by golly, if you can do it that way, do it that way. I agree with that. I just always found it hard.
There's an element of behavior too. One thing I help my clients with is every business is different, but you don't want to come into a meeting, market and sales, feeling like I need to get this client.
Yeah.
I need to get,
yes.
calls. Hey, are you coming in today? Or you missed your last meeting. You don't want, and those things are important to do, but there's a tone of voice when it sounds like
I need you to come, please come.
that revenue element of it. And I, before I did corporate FP&A, I did time in internal audit. And what people rationalize in certain circumstances, you won't be surprised. Good intentioned people and financial stressors do things that they normally wouldn't do.
So true. So true. Yeah. I used to have a coach who would say, when you chase money, money runs away.
Yeah.
Don't chase money. Yeah. Okay. All right. I'm with you. Okay. So you're walking us through all these lines of a P&L so that we have a clear, in black and white in front of us, list of a column of numbers that are going to tell us about the overall health of our practice, good, bad, or otherwise. Right?
Yes.
Okay. I'm with you.
So the next thing I want to talk about, so we talk about owner's draw, transferring that fixed amount. One thing I want to harp on is taxes.
Okay.
Before I went out on my own, I assumed everybody was good, compliant citizens and paid their taxes on time. But once I got into the real world, I didn't know how tax debt was such a thing, specifically among business owners.
Yes.
Because like you said, a lot of them just transferred what was left over into their personal checking account. And then when they did their tax return, they owed $7,000, $20,000. I've seen $100,000 tax debt owed. Wow. And you look at your checking account and you say, well, I have 3 months reserve, which is maybe $20,000 to $40,000. What do I do? So putting money, I highly a separate account, completely separate account, and transfer that money. And in your mind, consider that money already gone. And that is a big mental hurdle for a lot of people, even for me at times, knowing that this amount of money set aside is not touchable. No, I can't reinvest it back in my business. Yeah, that's a marketing campaign I want to do, a trip I want to do, and reinvestment with employees I want to do. That money is actually owed to the government.
100%. That was one of the first lessons I learned. I mean, like very beginning when I was brand spanking new at this in my early 30s, I would lay awake at night when quarterly taxes were due, praying that a big check from Blue Cross would pop in and I could pay, right? And somewhere somebody said, start putting a certain amount aside for taxes. And I would, 15%, 20%, 25%. And back then, this is dating myself, I got paid with checks and cash. And I would literally go to the bank on Friday and take with an envelope of money people had paid me that week. And I would say, put this much in that account and this much in this account. And I would, it had its own account for taxes. And from the very beginning, it was like I didn't even have that money. That was really helpful. That's trickier when you're getting paid electronically.
Mhm.
You have to physically, like you have to go in there and move that money before you start thinking it's yours, because you're right, it's not. And you will feel so much better if you set it aside. You will feel so much better. Yeah.
And I think when you talk about percentages, I do believe if you do this exercise, you'll know the percentage of your profit. So you'll know the number to transfer, or at least
Yeah.
close enough around the number. And that
Yeah.
could be similar fixed payment. You're just putting it into that account every single month, every single quarter, given the seasonality of your business.
Yeah.
So these numbers, yeah, they're nice to look at. Yeah, you get something you'd be proud about, but these are functional numbers. I want people to know. These are things that actually could help your behavior and actually reduce a lot of stress when it comes to business ownership, especially on the financial aspect.
Good. I appreciate that. Yeah. Yeah. Okay. Yeah. You're not doing this for the fun of it. You're also not doing this to beat yourself up.
No.
What was it you said before we started recording about your failure and feedback?
Yeah, your P&L is not judging you. So,
Yeah.
and it's, trust me, we fall into the comparison trap. So-and-so is bringing so many clients in a certain dollar rate revenue. So-and-so looks like they're going on trips all the time. Your P&L is not judging you. All it is doing is providing you feedback. So
Yes.
run your own race, manage your own P&L. That doesn't mean you don't take advice and tips, which is mainly what this podcast is for, from people who've been there and done that. But you are running your own race.
Yeah.
I listen to a podcast, they say people should all themselves a lot.
Yes.
You should be doing this. You should be earning this. And as a business owner, you do what you feel like is best, as long as you're doing it in an ethical, moral way. But your P&L is not judging you. It's only giving you feedback. And that's the one thing I really want to harp on.
100%. 100%. Okay. So yes. And I think I said to you, it's not failure. It's not failure. It's feedback, right? It's just data.
Yeah.
And as a business owner, you need that data. Even if it's not pretty, sometimes you will feel you are more in charge if you know what you're dealing with, right? Good, bad, or otherwise. Now, if I'm spending money on something in my practice that I cannot justify, I also cannot hide from it anymore, right? And I know it, and then I have to do something about it because I can't pretend like I don't know it, right? So, you'll make a much better informed decision about when to hire people, about when to take on a bigger office, about when to bring on an assistant, whatever. So, yeah.
And
okay.
It's funny, and I would say, I know this is so hard, but share your P&L with people, whether it's a mentor, a coach. Share your P&L. Be open with it. And you might be a better financial person. So in my situation, I'm the finance person in my household, but somehow my wife has intuition that says, you shouldn't be spending that. And she'll just walk away and not provide any context or clarity. In about 2 weeks, I'll think about it. I was like, she might be right. So I know money, we're so private, we're so hush-hush. But if you have that mentor, that coach that you trust, show them your P&L, tell them what you're doing in your strategy, and you may be surprised what comes back.
Yeah, I agree with that. Yeah. Yeah, I'm going to come back to that in a second because I think that's extremely good advice. I'm going to come back to that. But I want to make sure I don't throw us off of this. Have we gotten all the way through it? Is there more?
Last point.
Okay.
At the end of all this, so you have paid your taxes, did your owner's draw, reinvestment.
Okay.
I want people to regularly have a habit of reinvesting back into those businesses, their business. Remember that section where it's like, well, that makes your business, where you're located, how you service, all those marketing materials. I want you to take some of that money and reinvest it and make those things better.
Mm-hmm.
And if you do this quarter after quarter, year after year, have some set funds allocated for better, I think you want to enjoy your business more. Sometimes better means frees up your time. Sometimes better means your marketing material looks different, or you move to a nicer place. These little things that are better. And I feel like that consistent better makes you enjoy your business and allows you to be innovative, because there's nothing worse than somebody who's stuck doing the same thing all the time. But if you're innovative, I think that keeps you in the game.
So that's under the operations section of this whole thing, right? You're saying be thoughtful and intentional about using some of that money on purpose to build, to make things better. Yes, 100%. Yeah.
Yeah.
Yeah, I agree with that. Okay.
Yeah.
So how do you use a P&L over time? How does this help you over the course of the year?
Yeah. So one thing is begin putting these numbers together. Be patient with yourself and begin to put these over on a month in and month out basis. And you're going to start to notice something if you're paying attention called trends. You're going to see some things going up, some things going down, some things going up again, some things completely shutting off and stopping. And you have to ask yourself, why did that happen?
Yeah.
And the why should almost be a mystery hunt. Like, how can I solve this puzzle? Why is this number different from last month or the past couple months? And those why tell you things about your business. It's a feedback that says, hey, this is different. Why? Are you doing something good? Are you doing something that is adversely affecting your business? Watch these numbers, and they will actually, it should be like a book. You're reading a story of what's happening and why it's happening.
Okay, I like that. Yeah. Be curious about what those numbers are telling you, tracking them over time. So when I do this with my bookkeeper, I look at where that same line of numbers for now versus where I was last year at the same time. So I will have like year to date, the revenue that's come in. So like how much, and you were talking about knowing where your revenue is. I used to track, well, I still do track this, how much of my total income comes from coaching versus from the counseling work that I do versus other things that I've done. I have an Airbnb. I will now be adding that into because that's another revenue stream. So it's all part of the whole picture, right? So one of the things I have found really helpful is to look at that line of numbers for where it is now versus last month and where that line of numbers is year to date versus where it was this same time last year, which tells me I'm ahead or behind or I'm about the same as where I was last year. Is there any, like, is that a good idea? Are there other things I should be looking at along those lines?
No, I think that's a bit of year-to-date calculation is something that we regularly use in finance. And we use that because, like you said, there's a lot of seasonality. Sometimes it's down in December. Sometimes it's down in the summer. And that allows you, that clears out that noise, which is what we call this natural flow of a year. And that says, how am I doing compared to that previous time period of the same exact time?
Yeah.
And once you watch those numbers, you can actually see, am I doing better? And maybe the market is changing. That could be something that, hey, people aren't doing private pay as much, or people are losing their jobs, so they're not using their EAP program. So those things, but you would not take time to understand those things unless you're regularly looking at the numbers. And hopefully you're looking at the numbers so it's not actually affecting that transfer into your personal checking account.
Yeah.
You could try to almost get a little bit of ahead of it before it depletes those reserves.
So y'all, what Randall's walked us through how to do this in a manual way, like how you can pull information from various sources and create your own spreadsheet so you can track your own numbers. And that is a really perfectly fine and appropriate way to start. And if you have never done anything like this, I encourage you to do so. That said, the bookkeeper I work with uses a program called Xero, Xero, that produces those reports. I actually can go into it and just click on a couple of buttons and I can print out my own version of this anytime I want to. Quicken, I think, does the same thing. I'm sure there are other tools out there that you can probably tell me about, Randall. But if you're using any kind of a financial management tool, a lot of times this will be something that's built into the software where you can just run a report that will tell you your P&Ls for now versus last month versus last quarter, whatever. I want to go back to what you said a minute ago about share this with a mentor, because it says 2:22 on my clock. There's so much shame and secrecy around how we manage our money, what we understand or don't understand. And guys, I'm not kidding. I'm the poster child for this, because I am such a social worker, and I have a social worker brain. I have a humanities brain. I can talk about English and history all day long, but math and science, I can do it, but it does not come natural to me, and I have to really work at it. So it's very easy for me to feel stupid when I'm talking about this kind of stuff. Very easy. And I don't like feeling stupid. It's not something I'm very used to, honestly. As I say this to you all, As I'm talking to Randall, I find myself sitting up on my chair straighter. Like I feel a need to stand up taller. It is such a loaded thing. So I want to tap into what you just said, Randall, about speaking to a mentor. A mentor can be a bookkeeper. It can be a certified financial planner like you. It could be somebody from your investment company. If you invest with Vanguard or Fidelity or whoever, somebody from there will help you. It can be the accountant that helps you with your taxes. And if you don't have any of those in your world, I encourage you to find some. My favorite coach that I did most of my work with, she used to say, and she was a musician originally, so this doesn't come natural to her either, but she would say the two people you must have on your team is a good financial planner and a good bookkeeper. And I'm like, that's honestly when I started hiring that, because I was like, really? I didn't know that. I've never needed that. I mean, I can sort of figure this stuff out. Turns out I did need that. And what I do now that I did not used to do is I sit down and go item by item with my bookkeeper. And y'all, a bookkeeper is not an advisor necessarily. They can do that. And Randall, feel free to interrupt me if you want to throw something in here. They're tracking the numbers for you, which makes it, I find that really, really helpful. But then I can look at how much am I spending on credit card fees? Why is it higher this year than it was last year? Why am I spending so much on subscriptions? Do I have some extra ones in here? Probably I need to weed out. Wow, I spent a lot on meals, travel and meals last year. Maybe I need to look at how I'm doing that, because that's not always money well spent. Coaching. There was a while when I was spending a lot of money on coaching. Don't regret any of it, but I was very conscious of it. I needed to know that, right? So digging into the details tells me I'm spending too much here, or, oh, look, I'm doing better there. That's good. I'm trying to work on keeping more of what I earn. That's what I'm trying to do because of that history I had of justifying anything, right? But I know other people who do just the opposite. They don't spend a penny because they're so afraid all the time, which is it's its own kind of lack mindset. And sometimes what you just said, Randall, about don't be afraid to invest in your business. Hire a VA, work with a coach, buy the better software that's going to make your life easier. Like sometimes that is exactly what you should do. Tracking your numbers in a conscious, thoughtful, deliberate, and consistent way will help you make better decisions all the way around, even when it's hard. The last thing I want to say on this, I promise I'm about to stop, talking about mentors. Y'all, I started meeting with the guy at my investment company where I have my IRA and stocks. I requested an in-person meeting because the company I work with just happens to have an office in Knoxville. Very handy. They don't always. And I cannot tell you how scared I was to go meet with that person. Like terrified because of this self-esteem stuff I have around this stuff. And the very first time I met this fella who was young, fresh to the field, and all I thought was, oh, you poor thing, you get stuck with the social workers. You don't get to roll with the high dollar people. Turned out he had a real heart for people like me, therapists, people in small businesses who don't do this naturally because of his own history and his own background. He really had a heart for it the way I think you do, Randall. And far from making me feel stupid, he was extremely helpful. And we met weekly for a while. And in the beginning, y'all, I was just asking him to teach me how to read the dang website. Like, what am I looking at when I look at all these letters and numbers on this website? I can see the bottom line. I can understand interest earned or money lost or gained, whatever, but I don't understand the rest of this stuff. And I cannot tell you how helpful that was to have a human being I could meet in person to talk real stuff, who absolutely saw the good, the bad, and the ugly, and was completely respectful and kind and patient and made me feel more powerful, more clear, stronger, better prepared. So when you tell us to don't be afraid to show this stuff to somebody, by golly, if I think of all the things you've said today, that's the thing I want to mostly highlight. Like, find the help that you need. In AA, y'all, in 12 steps, if you're familiar with the 12-step world, the 5th step comes right after the 4th step. The 4th step is a fearless and moral searching inventory of the impact that your decisions have had on those around you. And the 5th step is to share that with God and another human being. There is freedom and healing when you start to show your numbers to someone that you trust, who is a professional, who understands, who will help you with them. So don't be afraid of that. Didn't mean to get off on a tangent there, but I feel like this is really important.
Now, I think a testimony of somebody who's gone through the financial planning process had been to an empathetic advisor, not somebody selling insurance, somebody who's really trying to make sure you're successful money, but happy with your money as well, and comfortable.
Yes.
I think that's something that our profession, we are able to do. And everybody in the profession, like just like every therapist, are not created equal, but find somebody who cares, number one, and number two, has a full understanding of what you're going through as a business owner. And I think that makes a humongous difference.
That's great. Thank you. That's really great. Yeah. So how do people find you?
Yeah. So the best way to find me is on my website. So www.deasilwm.com. So that's www.deasilwm.com. You can find my information, how I service clients. I'm also on social media. So if you want to hear more how I think about money, how I service clients, you just search my name, Randall Avery, online. On all those platforms, you can book a free 15-minute consultation. There will be no sales. It's just a chance for us to talk and me to hear about some of your concerns. So hopefully that's a nice step you can take towards financial independence.
He doesn't bite, y'all. He's friendly. And we will link all that, Randall, in the show notes below for sure. We'll do that. And don't you have a book? You have a book that you've written, I think.
So I'm the author of the book, Hacking the System by Creating Your Own System. So it's on Amazon right now. If you feel like, hey, this money stuff is tough, and you may not be at the point where you're ready to hire a financial planner, this is kind of like a tell-all book to say, there's a system in place. And if you learn the system and leverage the system, you also can win. So it's talked to from the perspective of somebody who's really trying to get over the hump when managing their money.
Excellent. I'll be sure we post that as well. Awesome. Hacking the system by designing your own system.
By creating your own
system. By creating your own
Hacking the system by creating your own system.
I love systems. Okay. That's awesome. Okay. Y'all, because you have met him here, I'm hoping that you will be a little bit less afraid, right? And so take advantage of that 15-minute phone call. You might learn something from that, and you might find that this is as hard as you thought it was going to be. Speaking from experience, I can tell you that is the case. It is not as hard as you think it's going to be, and it's so much better when you have help. This is what we invite people to do with us all the time, right? We invite them to trust us, and it's hard for them to call us. This is our version of the same thing. That's all it is. So thank you, Randall. This has been super helpful. You have literally walked us through step by step all the different components of a healthy, informative, useful profit and loss statement, which is a great sort of a financial dashboard of the health of your practice. I love that. I'm going to use this myself, actually. I really love, in addition to what I already do, this, I'm going to use some of this because you've said a few things today that I don't do that's been very helpful. So, thank you for this. Thank you for all of your time today. Thank you for your encouragement because I can see it on your face that you mean it, and I really appreciate that. I like to close by asking people if is there anything that we haven't talked about, anything we haven't covered, anything I forgot to ask you, or anything that you just feel called to share that you feel like will make this conversation complete?
Yeah, we talk about finances, and I know a lot of people tune out at times and say, hey, I'm doing this because I care and I love. I really want people to know that you should be compensated for the work that you do. You guys have went to school, obtained your master's, licenses, and done all these things. You deserve to be compensated and reinvest back into your work. So just know that you deserve to live the life that you deserve and have a business that is not just going along, but thriving. That's what I want to leave people with.
I love that. Not just going along, but thriving. You deserve that. Yes. Your expertise has a value to it. Your heart is free. They get all of that. All right. That's beautiful, Randall. Thank you. Perfect. What a great way to wrap up. And with that, guys, I hope you will go back and listen to this again if you need to. I know we covered a lot of information pretty quickly. I am a compulsive note taker. I can't help it. When I do with these interviews, I always tell myself I'm not going to take notes, but I can't not take notes. So I have indeed my own little list of everything that needs to go on that spreadsheet. And I hope you will do that yourself. Give yourself time, listen to it slowly, write this stuff down, and go figure this stuff out, because you will be a better, more successful practice owner, and you'll be happier, really happier. And that's important. All right, everybody. Thank you so much for tuning in and sticking with us today. I really appreciate it. I know this is not the topic that is easiest for us to do, but it is important, and I'm really glad you're here. And with that, I'm going to let you go off into whatever winter storm you're preparing for. And I will see you next week right here on the Ideal Practice Podcast. Bye now.